Hi, welcome to the Market Alert for Wednesday, the 16th of November 2016. So, yesterday in the Market Alert, I said to have a look at the opening range, see how the market fared, and you can see there for the first 1, 2, 3, 4, 5, and 4 of these bars, you will see all found resistance at 18,868. So the market stuck at this resistance and then eventually became sideways. So the first bit of volatility was sideways, and the range of these bars, if you come up to the tools option and then get the measurement tool, and all you have to do is just move this to the low of this bar and then up to here. You don't necessarily have to click on the bar. I know that's the high of that bar because I can see it in the data time at the top. And there we've got 60 point range. So, and then after that, that was the longest bar. And then after that, it just became very sideways, which is why I sent out a note to say, look, forget it. And then later on in the evening, we saw the market put in a failed sell signal. There was a buy signal. This wasn't a success until after the market closed, which you can see just here. So this is another reason why yesterday I said stand aside and not bother. The market is still sideways. You can see the overnight activity here. The market, let's just have a quick look, see what we've got. And we just bring this back just a bit here because the market opens here. So that is the low up to the high, and we've got 49 points there. So again, the market fairly quiet. That's the range, the biggest part of the range, but you can see it's become really quiet since, and again, it's just nothing we can do. The market's digesting that Trump is in the White House, and we've just got to wait for something to happen to actually kick the markets off. Like I say, it is out of our control. In the daily chart, you can see this, the market is sideways. I'll just compress this a bit and zoom in. You see there, the market sideways, the volume's dropping off. Again, nobody buying this market, is just purely and simply being held on the highs and manipulated, rigged as before. So who knows? It's just a matter of waiting to see what happens there. Well, it's Wednesday, so we've got the crude oil inventories out today. We've also got a few central bankers coming out and speaking as well. From 2 p.m. Cunliffe, I think there was another one, wasn't there, before that? Nope, just the one. And then we've got crude oil inventories at 3:30 p.m. So let's see what happens when we get this news. It could be one of those days where it's quiet waiting for the crude oil figures and then nothing after it as well. But again, just watch the first 15 minutes. If the range is sideways, even if it's 50, 60 points, then it's going to go quieter thereafter because the market hasn't got any direction at that point. It's just volatility, the fighting between the buy and the sells, and eventually that tapers off and the market becomes sideways. And if you think about it, there isn't nothing really until Yellen on the 15th of December, not the 15th, it's around the second Wednesday in December when she'll make a decision on interest rates. So again, we'll just have to wait and see what happens there. In the implied volatility, 1132 for yesterday. Again, you can see that on the chart. This is moving to the downside, and that's great. And long may continue down to the downside as well. That means that when the market does start to fall apart, the options are going to be cheap, and it's also a good precursor to the fact that it's going to do that, and there's going to be some sort of major correction in the market too. News-wise, well, if this is to be believed, let me just get this to show up. Alright, is this Trump's mandate to Yellen, print more money or you're fired? Who knows? But it's interesting because he said he wasn't going to do this, but of course in the run up to the election he was talking about infrastructure spending, roads, bridges and so on and so forth, that he may be pressed to do it. But I mean, it's how much longer they can do this nonsense for. If he comes in and says print $1 trillion, blimey, I mean, it's already up to 21 trillion. Let's just have a quick look at that. Yeah, it's just reading this bit here. Enormously growing deficits, which will add to intractable national debt trends to force the central banks into an ultra-loose monetary policy. But it's not just the 20 trillion public debt that will put pressure on the Fed to keep printing money. The total non-financial debt soared to 33.1 trillion at the end of 2007 to a record 45 trillion in Q1 2016. That means debt as a percentage of GDP has climbed from where it was prior to the Great Recession of 226% all the way up to 250% of the economy. So again, this is the problem. There's not enough growth and tax receipts to pay the interest on the debt. It's as simple as that. And then in the bond market, of course, you've got problems there as well, which I recorded a video about the other day. So certainly interesting times. Again, I'm still going with the market is going to be sideways till Obama clears off, and then we'll start to see the party happen. And as well, add into the mix if Yellen increases interest rates as well, which would be slightly odd to actually print money and increase rates. That generally doesn't go hand in hand. It's generally the case of printing money and lowering rates. But again, who knows? The world's gone mad. So we'll just have to wait and see how it unfolds. Very difficult to predict, I'm afraid, because the markets are controlled and not free markets anymore. So it's a matter of just waiting to see what they do. Right, that's it for today. I will report in later on today. And as ever, thanks for watching, also for your support. See you in the next one.